Welcome back, lions and wolves. Let's talk about the economy, the macro stuff. So in this video, I will cover. There's a lot to cover. Again, every week it just gets more intense, right? So first of all, I'm going to cover the gold asteroid. Then I will cover the G7, G20 meetings, trade talks, current events, and we'll touch base on some economic data and certain things that are in the news. Of course, there was the lefty debate, right? Free stuff for everyone, and we'll look at some economic indicators. I'll take a look at gold towards the end, and we'll go from there. This is sort of just going to freestyle this one as well. First of all, this is not financial advice. Consult your financial advisor. I'm not a licensed financial advisor, although I do have a website where I've compiled some data and information to help you with your research. Just go to MMG Invest. This is what the website looks like. And it's data on gold and silver mining stocks. And there's a video on the website you can watch, and it shows you what's pretty much inside. So, where am I? So much going on. So more than half of Americans are literally lying awake at night worrying about money. So over 50%. We'll get to that. Alright, let's talk about the asteroid. The gold platinum asteroid. And Peter Schiff, he tweeted, or actually wrote an article saying that it was fake news, although it's not. It's out there, I guess, the asteroid. But that's not the question. The question is this going to happen anytime soon, where there's mining companies sending off into space teams of miners and mining equipment? Look at this. Identified an asteroid worth 700 quintillion in precious heavy metals. Alright. So how do you get the metals back down to Earth? Well, first of all, let's talk about the costs to do this. As of right now, in 2019, it costs Elon Musk and SpaceX billions of dollars. So SpaceX says that it costs $62 million every time its Falcon 9 rocket is launched. That's just to launch it, into near orbit. Now, a space mission with tons and tons of equipment, traveling thousands and thousands of miles that could take weeks, months, years to reach an asteroid. And that is an asteroid that is flying through space very fast, likely. Like, who knows how fast it's going? It could be going thousands of miles per hour. I don't know. You know how much fuel it would take for a spaceship to catch up speed wise, and then it's probably spinning. So then your spaceship would have to land on the rock that's flying through space and spinning. And then you have to mine. You have to extract the metals. And then it costs. How much does it cost? It costs about $10,000 per pound. That's sent out into near orbit space. Listen, guys. I just don't see it. And there are actually companies looking to do this in the future, but the nearest one is like 50 years away. That's their estimate to when they will be able to launch spaceships and start mining asteroids out in, in the middle of space. And then you would have to find them, right, as they come nearby, because you can't go to far off distant asteroids that are years and years away with current technology. And that's assuming at today's prices of metals, right? So, yeah, I mean, if the precious metals go up, right, it's like $10,000 an ounce, which that's a lot of people, that's what they're saying we're going to see in the coming years because of all the debt in the world. Yeah, you're going to see some companies try to do this, and there are some already out there that are like publicly traded. I highly suggest you don't invest in them. If you do, it's highly speculative. It's probably not going to work out. But you're probably better off mining or trying, investing in mining companies that have reserves in the ground right now. It's much cheaper. It's much cheaper to mine the crust of the earth right now than to send out spaceships, okay? And I just, listen, guys, it's the equivalent of saying, and Peter Schiff, he posted on Twitter that it's the Bitcoin people that are causing this fake news. So, I mean, this is the equivalent of saying AI technology is going to be able to decode Bitcoin in the next, 5 to 10 years. Which is actually, I think, more likely than us creating giant spaceships and, catching flying asteroids with some gold and metals on it in the middle of space. It's not cost effective. Not at all. How much did it cost to send that Tesla up into space? I was researching it earlier. Not exactly sure, but listen, guys, we're probably not going to see this in our lifetimes. Also, if the global economy slows down and we go into a global depression, which is very likely at this point, space, exploration is going to get cut. Funding for that is going to get cut. And you could make, all kinds of crazy predictions. We're going to have 3D printed space stations and spaceships, and yeah, I mean, we might be able to do that in the future. I probably will. I don't know, but it's right now. You need to focus on the next 10 years, next 3 years, not the next 100 to 200 years. If anything, I think humanity and society is there's backwardation at this point. We're hitting peak prosperity on all levels. With the internet, information, technology, and, cyclically, there's going to be, the Dark Ages again, all right? After the Roman Empire collapsed, humanity went backwards for a few hundred years. And I think we're going to come up on that. And I'm actually going to make a video on that. That's why I had that intro that was showing you those bubbles. Well, those were empires that would become huge, and then they would break apart, and then smaller empires or smaller countries and empires would be created out of them. Same thing happened to the Roman Empire. And I'm going to talk about the age of decadence, right? And I'm going to make a nice little documentary on that. It's just that those are extremely, extremely time consuming, and you have to do some real crazy film editing. But I do want to do it. It's one documentary I want to make. It'll be a mini documentary. I'm not going to make any promises when I'll have that done. Hopefully I could do it in the next few weeks or something. Alright, so yeah, I mean, these are my thoughts with the asteroid. So, meet the average American millennial who has $8,000 net worth, is delaying life milestones because of student loan debt, and still relies on their parents for money. These are the people. So the millennials and Generation X they have to pay for all these pensions, for all these, first of all, the pension funds, they're invested in the stock market. And the millennials have to invest a lot of money to keep the stock market going higher. They really do. I don't know where else the money's going to come from besides money printing and the Fed. I'll talk about that later. But for all the entitlements, The millennials have to be more productive and they have to have more wealth to support all of the entitlements and the retirement free stuff the government has promised to the baby boomers who are retiring now. And these baby boomers, guess what? They're going to sell their stock to live. And when they start selling their stocks at all-time high price valuations on the stock market's going to fall. What happens when the stock market falls? Pensions blow up. Retirement funds blow up. And I don't know how Social Security is a Ponzi scheme. Millennials pay into it, but they're never going to see it. Generation X is never going to see it. And ironically, I think the baby boomers thought, well, we will see it, but our kids and our grandkids won't. And they thought they wouldn't live to see the day the Social Security goes unfunded and the money's not there. And that day is already here. It's today. So it's kind of funny. That's what happens when you sell out your kid's future. Yeah, so the U.S. entitlements is like over 200 trillion. Globally, it's who knows. I didn't look it up. I know Europe's in the same boat. Japan's in the same boat. All the entitlements and pensions and the retirement funds that governments promise their people, they're just all unfunded. The money's not there, guys. Of course, Trump, he talked to the Chinese emperor, because he's an emperor now for life. And, of course, they're going to spin it. Trump's going to come and say, well, he's already, dialing back on tariffs. He's like, I'm not going to raise any more tariffs. We're going to start trade negotiations again. So Monday, the stock market's probably going to go up a little bit, And this has been going on for like over a year now. It's nonstop nonsense. It's almost like manipulation. And it kind of is. So heading into the end of second quarter, 113 S&P 500 companies have issued earnings guidance for the quarter. Of these 113 companies, 87 have issued negative earning guidance, and 26 companies have issued positive. The number of companies issuing negative EPS for quarter two is above the 5-year average of the 74. In fact, if 87 is the final number for the second quarter, it will mark the second highest number of S&P 500 companies issuing negative earnings guidance for quarter since 2006. So right before the 2009 and 8 financial crisis, companies would ahead of time so their stocks don't plummet as much. So people are sort of estimating, right, that they're going to have less revenue and less earnings. They put out these guidance so the market doesn't get caught off guard, because when investors get caught off guard, they panic sell. So since 2006, we haven't seen earnings fall by this much. And I'll post an article in the free MMG Invest group. Yeah, so it's already out there. Ceasefire, China trade talks, Trump backs off. So the pension death spiral. Now listen, you guys have to understand that pensions, they invest in the stock market and they keep on taking more and more risk because they have to make more than 8% ROI, so return on investment, every year for the pension not to go bust. So they could continue to pay out the people who are starting to ask for their pensions now, the baby boomers, right? So they keep chasing higher yield, which is buying junk bonds and all kinds of crap, and buying high risk stocks. That's what pension funds are. They literally invest in the stock market now. So the problem with this is, CalPERS, the largest one in California, it targets over 7%. Well, the stock market's already at all-time highs. PE ratios are through the roof. So when the stock market tanks, pensions are going to blow up. Pensions blow up. guess what happens? The stock market tanks even more. And it's like it's a death spiral. And there's no way out. These pension funds are just completely screwed. They're completely... I mean, this can't go on forever, guys. That's the stock market, the dollar, the bonds, these pensions, these entitlements have all become essentially a Ponzi scheme. There's fireworks tonight, if you guys could hear it. Saturday night. This is what I do Saturday nights. So now about 85% of the 129 public pensions in the U.S. have cut return assumptions since 2014. These targets are expected to continue moving lower. And like I said, if it goes below 7-8%, they go into the negative, and they can't pay out all the empty promises. The Kentucky retirement system plan for 123,000 employees in non-emergency jobs could be one of the worst off systems in the U.S. It currently only has $2 billion in assets for $15.6 billion in liabilities. So liabilities are what they have to pay out to people. The burden has resulted in government service cuts, pay freezes, and failing headcounts. You know, CalPERS is in trouble. Chicago's pension is basically gone bust. Listen, they're going to need bailouts by the federal government, and how are they going to pay for it? The Fed is going to print money. That's what they're going to do. So what happens when the Fed prints money to bail out all these entitlement programs? Essentially, everyone gets taxed through inflation. That's why they will sacrifice the dollar. That's why people who say there's not going to be inflation, they don't understand the debt situation. There has to be inflation, because it's the only way they could pay for all of this, is to print trillions upon trillions, because they can't just not give out checks, because what happens then? You get riots and, you know, off with their heads type situations. And it's the easiest way out. It's to just debase the currency. All right, student loan forgiveness. I mean, every Democrat candidate is promising free student loan. Some are promising $1,000 every month. Some are they're just, and then they're promising, you know, first of all, they want no borders. Everyone come in and we'll give you free healthcare. Guys, oh man, the level of insanity that is unbelievable. And these candidates, they don't care about the future of the United States. They don't care about the future of the people in it. They don't care about anything besides winning. So they will promise you free stuff. And of course, there's no such thing as free. You're going to pay for it. You're just going to pay 100-fold in the very near future, because if they give away free student... Okay, so if the government pays off student loans, I do feel for the students. I mean, I understand, because I experienced it myself. I went to college myself. And the way I paid it off was 8 years of military. So, but I personally knew college was going to be a scam, because you don't have to be a genius. Even when I was in high school, I was like, well, if everyone's going to college, won't the prices just keep going up, and then your degrees are really worth less because everyone has a college degree, just like a high school degree? And when I said this to a high school teacher, they just didn't know how to answer me. It was funny. And everyone, you know, but I still went because I wanted to party, and it was good networking, right? And, well, no, I wanted a degree. Honestly, it's a scam. And, you know, everyone who went to get a college degree, they knew it was a scam. Everyone who was in college, we all knew it was a scam. And this wasn't too long ago, like 6-7 years ago, but, The reason why college tuition was so expensive is because everyone was let into college. They lowered the standards, and the government gave everyone loans. Everyone. They gave everyone with a pulse loans. Like those people in college who couldn't read. And that's another reason why your degree is worthless. And they just lowered the standards and kept lowering. Now, and that's why the prices went up. It's a Ponzi scheme created by government because the government guarantees everyone a loan. Unfortunately, you can't default on it, and you're a slave now. Now you're a slave to the government because you took that free money. Or it wasn't free money, it was just an easy loan to go to. So it's a slave scam. And I believe I wouldn't be angry if they pay everyone's loans off, because these people who can't pay off the loans, and they won't, they listen, they can't have kids, they can't buy homes, they're stuck, they're slaves. Their credit is it's in the dumpster. It's a dumpster fire. And they're just, not only are they enslaved to the debt, there's interest on it, and they can't better their lives. Now, is it socialist? Absolutely. And the problem is, if people get loan forgiveness, or it gets paid off or whatever, the problem with that is that people won't take self-responsibility. And I believe they should take self-responsibility. Honestly, the way these Dems are giving out or paying or proposing to pay off these loans is to just print money, of course. There's another way to do it. And I think you should take the money from the universities, because you have to understand all these universities have endowments. It's like over $1 trillion or something, or hundreds of billions worth of endowment funds. These universities are investing in Bitcoin, gold, silver, and stocks. They're investing your student loan money that they essentially got from the government, and they invest it. No, they should confiscate all the university's money and then pay off everyone's loans. People who just can't, they can't make more than like a certain amount of money every year. Although most of those kids, they were buying new cars, so with the student loan money, and they were spending it at the bars, and they had no business doing anything in college, getting artsy degrees and worthless degrees. So I think they shouldn't pay it off. No, you should reap what you sow and learn the hard way. And people are going to have to learn the hard way, not to trust the government, not to trust universities and their teachers. Because honestly, it's just a big scam. And the teachers were getting money from it, right? That's why they told you have to go to college. So I say everyone gets what they deserve. But if they're going to do it, you should take it from the universities themselves, who benefited from the scam. It's my opinion. Don't just print the money. Or maybe do both, because it's not going to cover it. By the way, you know how much, you know how many Americans owe? Where is it? I have an article. There's 1.6 trillion in student debt loan. And it's a crazy amount, nearly 5 million. So there's about 45 million Americans with 1.6. It's probably like 1.8 already by now. Let's say 1.8 trillion in debt, and 45 million Americans total. Out of the 45 million, nearly 5 million are already in default. Meaning they're just not making payments at all. They said, screw it, I don't care. I'm not paying them back. And here's the Wall Street Journal. That's huge. And when the next recession or depression or hyperinflationary global dark ages comes, it's going to be everyone. No one's going to pay. They're going to stop paying. So 5 million don't even pay interest. I guarantee you, out of the 45 million, maybe only 10 million pay, and then like 30 million pay only the interest, like pay $100 every month or something. And that's about it. And then the debt is just accumulating because there's interest on it. And everyone's becoming a real life slave. I mean, it's what it is. So, I mean, this is worse than the housing bubble in a way. Because not only were these students scammed, but their education was like socialist. So you paid to get scammed, to be enslaved, and then you were taught nonsense. And it destroys the next generations. This is hilarious. This candidate promises $1,000 a month for free for everyone. What do you think that's going to do? It's going to shoot inflation up instantly. When everyone has an extra $1,000 a month, prices are going to rise instantly, like at the stores, especially for things you have to buy, like food. Then everyone just raises their prices. It's ridiculous. It's great for my stocks, my gold, silver stocks. I hope one of these idiots get elected, honestly. Because the economy is going to implode anyways. At least they'll implode on one of these idiots. And maybe people will learn that free is not free. There is no such thing as a free lunch. Alright, so like 56% of Americans can't sleep because of money problems. Well, I thought we had the best economy in the world right now. Apparently we don't. If more than half, about 60% of the population can't sleep at night. So more than half of Americans ages 18 and older lose sleep. Here's some demographic info. What do you see as the top 3 downside global economic risks over the next 2 years? Geopolitical tensions. The most is trade war, as it hits the global growth. But that's also MSM talking points. They're trading. The trade wars are inevitable. It's going to happen anyways because these economies are... China's like the new world superpower. And the U.S. and Europe and all... The trade deficit has to get fixed. If it doesn't, as a corporation, the U.S. is going to die. Right? All right. So, millennials ages 23 to 38, about 60% of them are financial worries. Gen X, ages 36 to 54, over 63%. Baby boomers, ages 55 to 73, are doing the best. Only about, like, 55% of them are worried financially. Which is still, like, historically, like, depression levels. So, the rate hikes, right? U.S. is heading to a future of zero interest rates forever. And this is a Bloomberg article, so this is more mainstream. This is why gold is breaking out and it's just going higher and higher. Because the market is starting to realize, listen guys, just 6 months ago the market thought the Fed was going to keep hiking rates and normalizing the interest rate on all debts. Car loans, home mortgages, everything. Now, fast forward 6 months to today, the present, mainstream articles, the Fed will stay at zero forever. Just like Japan. And the reason is mathematically, they can't raise rates because the debts can't get paid off. For the entire country. For public and private. The federal net interest payments as shares of gross domestic product. By 2049, they estimate it to be about 5% of GDP. I guarantee you, if the stock market falls, it's going to be like way more. Like a lot more. Like the U.S. won't be able to pay just the interest on the debt. For the public and private. So the interest on all debts outstanding, public and private, you won't be able to, like, there won't be revenue from the economy to pay it. There won't be tax revenue. Like, it won't be able to get paid. That's why there's going to be inflation. They have to wipe out the debt. There's only one way to do it, because mathematically it can't get paid off through productivity. The only way the debt can get wiped out is through hyperinflation. I'm telling you, and that is why they're going to do it. That's why they're going to go to zero rates. That's why they're going to go to negative rates. That's why they're going to print trillions. It's the only way out. Or just default and say, hey, no one's getting paid. Just default on, just wipe out everyone's debt. Like, what is it, a jubilee or something? I mean, either way, I don't care. My stocks are going up that I invest in. So this will also be in the free room. The links are below the video. What else am I missing here? Listen, if one of these lefty candidates get elected, stock market will crash, and so will the economy. That's why I think Trump, no matter what, will get reelected, because the real people behind the curtain, right, who are holding all the strings, they're scared too, because they don't know how bad this is going to be when everything falls apart. So they'll rather just have Trump in, because they're trying to buy as much time as humanly possible, because, you know, nobody really knows how bad things are going to get when everything starts falling apart here. All right, so I'm going to finish it off with this. Why the odds of a recession in the next year are even higher than you think. So I talked about a stock market melt-up, right? Now, before I go into this article, I did forget about something I wanted to touch base on. So there's this thing called tax bracket creep or something like that. And you have to understand, when inflation starts running out of control, not only is inflation a hidden tax, which it is, it's like a stealthy one, employees are going to start getting paid more. And you're thinking, oh, well, that's great. Not really, okay? So years from now, like let's say maybe 5-10 years from now, something like that, a McDonald's employee could be making like $80,000 a year or $100,000 a year, because, you know, employers will have to start paying people more as inflation keeps picking up and picking up and picking up. And the problem with that is the McDonald's employee is making pretty much the same amount in today's value versus the future, but the units of currency is more. And the problem with that is it puts you in a higher tax brackets, because I guarantee you they're not going to raise the tax brackets. So when you make more than, like, you know, I don't know exactly what the brackets are right now, but when you make more than $60,000, you're going to pay like 5% more in income tax and all that. So as inflation picks up and people get paid more, they're going to fall into higher and higher tax brackets, and they're going to pay more taxes. And then you're going to pay more taxes anyway, because I guarantee you they're going to raise taxes. Bernie Sanders actually just admitted he is. And we're going to get a lefty eventually. All right, so let's go into this article. Why the odds of a recession in the next year are even higher than you think. Now, after I'm done with this article, I'll talk about the stock market melt-up, because it's a little tricky, right? All right, the reason why I am worried about a much more powerful than usual recession is because of the tremendous risks, namely bubbles and debt, that have built up globally in the past decade due to ultra-stimulative central bank policies. Okay. According to New York Fed's recession probability model, so this is the Fed, New York Fed, there is a 30% probability of a U.S. recession in the next 12 months. The last time the recession odds were the same as they are now was in July 2007, which was 5 months before the Great Recession officially started in December 2007. That's actually when it really started. All right. July 2007 was also notable because that is when Bear Stearns' two subprime hedge funds lost nearly all of their value, which ultimately contributed to the investment bank's demise and the sharp escalation of the U.S. financial crisis. Here's the chart. As you can see, we're getting back up there. So here's just more and more indicators that are starting to line up now, because you also have the yield curve, and this is the Fed's recession model. Even theirs is starting to raise some red flags. The reality is that, as valuable as the model is, it has greatly underestimated the probability of recession since the mid-1980s. So a 33% probability is probably more like a 70% at this point. So this methodology is warning that there is a 64% chance of a recession in the next 12 months, which is quite alarming. So here's another model, which takes you up to 64% chance. The reason why a 2/3 chance of a recession in the next year is so alarming is because the next recession is not likely to be a garden variety recession. They're ebb of the business cycle, as I explained. Yeah, I mean, it's not going to be a recession, guys. It's going to be like a Great Depression or worse. For example, one of the most obvious bubbles is forming in the U.S. stock market. The U.S. stock market, as measured by the S&P 500, surged 300% higher in the past decade. So, a 300% increase since 2009 lows. Meaning there's a long way back down. And remind you, no one's doing great. The economy isn't really that great. The economy was much stronger, I believe, back in 2008 than it is now. It was much stronger back in 1999 than it was in 2008. 60% of Americans can't sleep. Millennials have no money. Like, do you guys understand what I'm saying? In this time around, in the previous recessions, we did not have inflation. This time around, we are. And it's going to be bad. Like, it's going to be very strong inflation. And it's going to be the worst type of depression, because it's going to be a stagflationary depression. The Fed's aggressive inflation of the U.S. stock market caused stocks to rise at a faster rate than their underlying earnings, which means that the market is extremely overvalued right now. Blah blah blah. We know all that. Yeah, so we are up here, looking at a cyclically adjusted PE ratio model. So you can see right here. We're not exactly a dot-com bubble peak, but it doesn't matter. We're still up here. I mean, 2007 we're higher than 2007. We're actually higher than the 1929 peak. So the Great Depression peak. So I will talk about, are we going to get a stock market melt up, or are we just going to drop soon? Here's another chart. U.S. household net worth as a percentage of GDP. So this is your household net worth. So the value of your home and all the crap in it, right? So it's at all-time bubble peaks. 535% currently from the low of 1981. During the housing bubble, it was at 486% at peak. So we're past the 2008-9 mortgage-backed security crisis bubble peak already. And we're above the dot-com bubble peak as well. Give me a second here. I will post this in the free room. GS bear market risk indicator. Goldman Sachs, is that GS? Average percentile in the US for ISM slope of yield curve. So I've talked about the yield curve, guys. And it's signaling a recession coming. The US Treasury yield curve is a leading indicator for volatility. So the blue line here is the VIX, right? The volatility index. And yeah, I mean, there's a huge divergence. And you can see the spread between the yield, the 10-year yield on treasuries, right? And you can see this huge gap. Well, guess what? Historically, they're going to come back and visit each other again. And when the VIX visits the yield curve, I mean, or the spread, that's going to signal huge dump in the market. A huge dump. So there is volatility coming. Meaning stocks are at all-time highs. The only way it could be volatile is back down. The current probability of a recession is the same as it was during the big short heyday of 2007 when subprime was blowing up. Just let that sink in for a minute. So this article was written by Jesse Colombo at RIA, Real Investment Advice website. If you guys want to know, give them you know, credit here. So how is that going to affect the markets here? Are we going to get a stock market melt up that I've talked about? Now, I say that the stock market melt up is, I'm not saying it's probable, I'm saying it's possible. Right now we're at all-time highs. Here's the S&P 500 weekly chart. Here's a monthly chart. We've already experienced some very big volatility here. And right before a huge market crash, you start seeing volatility. So the question is, it all depends if the market dumps or not, right? If the plunge protection team and the Fed could keep the market artificially up, and then they cut rates, and then they start QE before the market falls a significant amount, like let's say they don't let the market fall below, and by the way, the plunge protection team's real, it's not conspiracy. Just recently, a year ago or 2 years ago, there was articles on it. Anyways, and they admitted to it. If they keep the market above 2,600 on the S&P 500 here, and then they start cutting rates and printing money, I think we could see a market melt up. But if the market falls too much, then no, we will not see a market melt up, I don't think. So I think it's crucial for the price to never really fall below 2,600 on the S&P 500. If it could trade sideways or bounce around within here, right? And then they cut rates and then do QE, we might get a stock market melt up. Now the question is, you know, even if you get a stock market melt up, will it be short-lived, right? You know, it might only be for a few months. So, and usually when things go parabolic, they go parabolic, meaning it just goes straight up and up and up, and it doesn't last long, not even a year. So, you know, it could do something like this, right? And then they cut rates, maybe do QE for some reason, and then boom. But I doubt they'll start printing if the market's just going up and up and up. I think what they're gonna do is the next drop they'll start doing QE, and we might not get that market melt up. In previous videos, I talked about a broadening top as well. So, you know, in the coming weeks and months, if we end this year lower with not all-time highs, I think the likelihood as time goes on that the top's in. So if we next week, you know, next week we might make all-time highs, and the week after that, blah blah blah. But if we end the 2019 lower than current prices, or we're not making all-time highs anymore, right? Then we'll get that broadening top. So we'll have to pay attention to that. All right, gold. Gold still looks bullish on the weekly here, and there's actually a decent amount of support at 1400. Now, if gold pulls back, here's a daily chart of gold. We might have 4 more days of downside. I think the worst we'll see is, I mean, the worst we could possibly see if there's if they dump it or there's a massive pullback. I don't believe it's ever going below 1280. And honestly, I think 1300 will hold up as well. That's like the worst case scenario. The best case scenario is 1400 holds up, and you know, by the time the next Fed minutes come by, which is in July, I think the end of July, we could be at 1500. And if gold goes to 1500, silver is going to finally break out, and so will the mining stocks. The mining stocks will take off in a really, really big way. All right. Here's another gold chart weekly. We have a giant cup and handle on the weekly. Also, my blue equilibrium line, it has crossed the 200-week moving average. Just like clockwork, the price exploded. And I talked about this for like a year almost, about my blue line, and no one else saw that. I don't get any credit because I'm small and I'm not known well. But honestly, if I was anyone else with a larger channel or a larger following, I would like, people would probably write articles about me actually getting the price of gold right, the breakout with the TA. Anyways, we have a giant cup and handle. Cup and handles are very bullish. So I wouldn't be surprised if 1400 holds up and the price keeps going higher from this giant cup and handle. That's why you guys need to go to my website and get that, you know, that data, that research I've done before it's too late. Here's another gold chart. Yeah, I mean, it's looking bullish still, guys. If there's, I say accumulate on any dip and pullback and dollar cost average. So I'm going to leave it there. If you guys enjoyed this video, smash some likes, leave anything in the comments section, share my videos. It's the only way my channels grow, and I will continue to keep doing this. Leave in the comments section anything you guys want me to cover, new topics and whatnot. Also, I will be posting in the free room a way you could purchase this new financial documentary, which is probably going to be really awesome. I'm going to watch it tonight. I haven't watched it yet. And it'll be in the free, I'll post it in the free chat groups for you guys to watch. And yeah, anything else, go to my website, share my videos. I think that's it for now, guys. All right, till next time.